Hello everyone and welcome to the SBI Securities weekly wrap-up podcast. So firstly, let's discuss how the markets have been in the week gone by. The Indian benchmark indices touched record highs during the week with Nifty 50 and Sensex ending higher for third week in a row. While Nifty 50 closed well above the psychological level of 20,000, Sensex achieved the milestone of 67,900 levels. The Indian stock market continued to outperform the global peers despite 3.4% rise in Brent crude oil and hotter than expected US CPI data for August. Positive global cues, DII support, fall in India CPI reading for August, and successful hosting of G20 summit were some of the reasons behind the rally. While Nifty 50 closed 1.8% higher on week basis, broader markets underperformed with poor market breadth. Mid or small cap indices managed to limit the losses despite Tuesday's massive profit booking. India's trade deficit narrowed to $24.2 billion as exports jumped to 3-month highs at $60.9 billion for August. Next week will be a truncated week and the market will take cues from the Fed's interest rate decision, the outcome of which will come on 20th September. It is widely expected that FOMC will keep the interest rate unchanged despite slightly higher than expected US CPI reading for August at 3.7%. The comfort is largely coming from the stable core CPI data, which stands at 4.3%. The Fed will wait for more data inflow before taking any decision on rate hikes. Additionally, the market will also keep a close watch on special session of Parliament between 18 to 22 September. Investors are recommended to use buy on dip strategy while keeping strict stop losses on either side of the trade. Sectors like PSU banks, defense, and crude-sensitive companies such as paints, tires, OMCs, and cement will remain in focus next week. Moving on to the weekly sectoral gainers and losers on NSE. Except for Nifty, Media, Realty and Energy, all the other sectoral indices ended on a weekly positive note on NSE, with Nifty, PSU Bank and IT leading the gains. Talking about the top 5 performers and losers on Nifty, the top 5 performers of Nifty were Bajaj Auto, Grasim, Bharti Airtel, Axis Bank and UPL, while top 5 weekly losers on Nifty were BPCL, HDFC Life, HUL, NTPC and Asian Paints. Taking a check on some of the key monitorables, the fund flows during the week remained healthy, with FII's net buying to the tune of Rs 149.5 crores during the week, while DIS net bought Rs 1,424.8 crores till 14 September. Rupee appreciated 0.2% on a weekly basis against US dollar at 83.088 per US dollar. Brent crude rose 3.4% on a weekly basis, reaching to $93.7 per barrel. The 10-year US bond yield inched up marginally to 4.286 levels as on 14 September from a close of 4.260 levels last week. Moving on to the key economic developments during the week, retail inflation in India fell more than expected to 6.83% in August, which was lower than July month's 7.44%. The decline was driven by fall in vegetable prices, particularly in the tomatoes. The reading, however, continued to remain above the RBI's tolerance band. The US inflation data in August accelerated to 3.7%, led by surge in gasoline costs, and was above the market consensus of 3.6%. The core CPI data, however, fell to 4.3%, which was in line with the consensus. The European Central Bank raised its benchmark interest rate by 25 basis points to record high of 4%. The new outlook shows markedly softer annual economic expansion through 2025, while inflation will weaken to average 3.2% in 2024 and 2.1% in 2025. Overall, the ECB policy was more on a dovish side, as the ECB said that it is likely done with the tightening cycle. China's industrial output grew 4.5% year-on-year in August month, accelerating from 3.7% growth in July 2023 and beating the expectations of a 3.9% increase. Retail sales grew 4.6% year-on-year in August, which was higher than 2.5% increase in July. The data suggests that the recent flurry of support measures may be starting to slowly stabilize a stumbling economic recovery. Some of the key corporate developments during the week were: first, Mahindra Holidays and Resorts India Limited signed an MOU with Government of Uttarakhand to invest Rs 1,000 crore to establish and develop Club Mahindra Resorts. The company aims to expand its key count from 5,000 to 10,000 by 2030. Second, Tata Steel Limited inaugurated a fully automatic construction service center in UP to manufacture reinforced products. The downstream manufacturing facility has a production capacity of 3,500 tons per month. Third, M&M Limited bagged Classic Legends will invest Rs 1,000 crore to catch up in middleweight life cycle motorcycle market and tap the burgeoning demand in the overseas markets. Fourth, KEC International Limited secured orders worth Rs 1,145 crore in Kingdom of Saudi Arabia for design, supply and installation of 380 kV overhead transmission line in Saudi Arabia. The company also bagged an order of Rs 1,012 crores across its businesses, namely civil, transmission and distribution, and cables. With both the orders, the year-to-date order intake of the company has surpassed Rs 7,500 crore. Fifth, Setu Securities have sold 16 lakh shares, that is about 0.63% stake in Shah Metallics and Energy at Rs 441.69 per share. For key corporate actions in next week, kindly refer to our weekly wrap-up report. The link to view the report is shared in the description box below. This was all about the weekly market podcast. Thanks for listening.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.